Welcome to this week's topic, which, as many of you will know, is my favourite topic, superannuation. I find so many small business owners don't fully appreciate the benefit of contributing to super and are too scared to contribute to super because their money will be tracked. There are a number of reasons I find small business owners don't like contributing to super. They don't trust the government. They keep changing the rules, they tell me. We can't touch our super. And then obviously the most favourite one, I don't understand it. So instead of burying your head in the sand, I want you to step up and start to understand it and fully appreciate how you can use your super and take advantage of the rules about superannuation. And the main one I do find for small business owners is no one makes me contribute, so I don't have to. Many people don't realise that small business owners that are sole traders, partners, or in a partnership or a family trust who only receive a trust distribution don't actually need to contribute 10% to super. There is no one making them pay super compared to if somebody's an employee and the employer has to make the 10% contribution. It's a short-sighted view, taking the money and keeping it and not contributing it to your super. And it has such long-term consequences that really are devastating for families when I see them at the other end of the scale at age 63 or 65 about to retire. And I see the full implications of not having contributed regularly every year, a little bit each year. According to the Association of Super Funds of Australia, for a comfortable retirement standard, we actually need to have $545,000 in super. As you can see, we are well below the target, whether we're male or female. Neither of us are retiring with sufficient money in super. And it's my aim to try and change that and get people to be more focused to increase how much they contribute to super. The benefits of super are totally unappreciated. For many small business owners, the main reason I reckon you should contribute to super is for asset protection. Should something go wrong in your business or you be sued, the money you have in super will be protected from creditors or liquidators if they come after you. I want to explain to you tax rates in super because every time I do this presentation to my clients in my one-on-one meetings, it is the one thing that just lights up and they fully appreciate why I love super and how they could be taking better benefit of it. So currently, most of us are contributing to super and we are in what's called the accumulation phase. We can make, or our employer can contribute up to $27,500 into super. When you put that money in super, your super fund will deduct 15% tax from that contribution. You, however, or your employer, whoever made the contribution, will get a tax deduction. And normally you are at a much higher tax rate than 15%. And especially if it's a personal contribution, you've also saved the 2% on Medicare. The next type of contribution you can make to super is what's called a non-concessional contribution. You don't pay any tax on this contribution and you can make up to $110,000 a year, or you can trigger the bring forward and do up to $330,000. But then for the next 2 financial years, you cannot make any further contributions. Why would you want to do this? Well, let's say you won Gold Lotto or Keno. What about if you got an inheritance? What if you've just got spare savings and you're getting close to retirement? It is one way to start boosting your super and you pay no tax on it. You don't get a tax deduction either though, so you can't have it both ways. What many people don't appreciate is the income earned in the super fund will only pay tax at 15 cents in the dollar. And if you've actually got Australian dividends, Australian shares paying a great dividend, it can actually create a refund for you because you get the refund of the franking credit at 30 cents on the dollar when the super fund only pays 15 cents on that income. And I've seen a number of super funds utilise this really well. The other great thing is capital gains in a super fund. It only pays tax at 10% if you've owned the asset for more than 12 months. I want to highlight that these tax rates are relevant to everybody, whether you're in an industry super fund, a public offer, or even a self-managed super fund. because many clients don't realise your super fund is paying tax at this moment. Now I want to fast forward. You're over the age of 60 and you can now retire. All of a sudden, you can start taking advantage of a different tax rate. Should you still need to make a contribution to super and claim a tax deduction? Well, you will still pay 15% tax on that, but you've got the tax benefit. You obviously had a higher tax rate in your personal name, so make the contribution and still contribute and get a 15% tax deducted from that. You can still do the non-concessional contributions. And again, no tax will be paid on that. But what most people don't realise is when you're retired and over the age of 60, or whenever you do retire over 60, provided your super balance is below 1.7 million, you will pay no tax on the income and no tax on the capital gain made in your super fund. So if you did have a self-managed super fund that had a property that all of a sudden had a significant capital gain, if you waited to the day you retire and after that date sell the property once you are in pension mode, look at that, no tax, no capital gains tax at all. I have clients who own rental properties in their self-managed super funds, and again, they're paying no tax on the rental income for the rest of their retirement while they own that property. So I want to highlight to you that for a couple over the age of 60, you can have up to 3.4 million in super and not be paying $1 of tax on the investment earnings or capital gains. And the great thing, when you're over 60, what you withdraw from super does not even go in your tax return. So how about starting to make smaller contributions and increasing your super balance? Not everyone needs 3.4 million to live on, but I just want to highlight to you how generous the super scheme can be. Now, if you've enjoyed today's session about superannuation and would like to learn more about ways you can contribute to super, I'd like you to join me with my Women Taking Control of Their Finances course. The course is a 5-week self-paced course online and costs $297. I also have a monthly payment plan in place. One of the topics we will be covering is exclusively on superannuation, as I think this is such an important area to fully understand and look at ways that you can increase your super balance and make contributions. Over the 5 weeks, we will cover a number of different topics, and each week is drip fed 1 week at a time. I don't give you access to everything at once because I want you to do the homework week by week and learn from each week's topic. I look forward to you joining me as part of the Women Take Control of Their Finances course, and look forward to seeing you next week when we do our next topic. My name is Rita Zapula, and I'm from the Wealth Creation Academy.